What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be talking about the top stocks, the best stocks to buy for, what month is it? May 2021. Now, going forward in these top stocks list videos, what I'm going to be doing is providing a little bit more context because I'm tired of seeing a lot of new traders get burned just buying ticker symbols without any more context behind it. Usually with these types of videos, there's no specific talk about stop limits, which price is an optimal price to get into, because a lot of times people see these videos way later and they just buy the ticker symbol because they don't know really anything about trading or investing yet. And so they just buy the ticker symbol at an arbitrary price and think that it'll be good in perpetuity. That is just not the case. So in order to alleviate that and provide you guys with more value, I will be doing a little bit more contextualizing on these top stocks. So with each ticker symbol that I pick today, I'll be telling you whether it's risky or whether I think it's risky, whether it is a long-term play or not, what my stop limit is if I set one, and what is an optimal price point. That way, if the stock runs up and it's way beyond where I think it's optimal for that stock, then you'll know, I mean, obviously you'll do whatever you want to do with your money, but you'll know whether I think it's an optimal play or not at that price point. And you definitely want to stick around till the end of the video because I'll be telling you how I'm playing it. So you definitely don't want to miss it. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which stocks you are trading for the month of May 2021. And let's get right into it. So these are the best stocks for 2021. Obviously the list could be much larger, but I have to keep it condensed for the purposes of this video. So I can't include every single stock on here, but let me know if there's something that you didn't see. Let me know in the comment down below. All right, first stock on the list needs no introduction, AMD. We all know that a lot of the blue chip stocks are trading at current all-time highs, and there aren't really many opportunities for value here. However, AMD just dipped below $80 today, and the semiconductors will keep getting beat up until there is a little bit more update on the narrative around the chip shortage. The market really wants to know how the sector is going to be addressing the chip shortage. And until then, I think these stocks will remain somewhat stagnant, but it's great for us if we want to pick these up for the long term. So AMD, long-term play, low risk. It is a blue chip, extremely profitable company, trading just below the 200-day moving average. I like it below $80. I will be adding some more if we hit the 300-day moving average in the low 70s. And if you want to get a little bit more risky in the semiconductor space, there is an ETF, a 3x leverage ETF called SOXL. So it trades at 3 times the leverage of the holdings that are in this ETF. And it's currently trading at around $35.61, just below the 100-day moving average. I'm going to be waiting a bit on this, but this is a mid to long-term play. Anytime it gets below $30, I'm excited to buy SOXL. So I'm going to be waiting on this. It's still a buy, but for me, it's a buy below $30. Now, for those of you that want an options trade on SOXL, I really favor a cash secured put here because the price of SOXL has tanked recently. The price of puts have gone up. You can actually sell a $30 cash secured put on SOXL expiring November 19th for $5.75. This means that if you get assigned at any time between now and November, you'll be obligated to buy 100 shares of SOXL per contract, but your cost basis is going to be $24.25. The way that I got that is by subtracting $5.75, which is what you're going to be getting for the put, minus $30, which is the strike price of the put. I think this play here is really optimal on an ultra bullish ETF based on semiconductors. All right, the next set of stocks got beat up after earnings. Now, these are high profile semi-blue chip stocks. We're talking about Pinterest, Netflix, and Twitter. These stocks tanked after earnings, and I'm looking to see if they will establish signs of support because I do not want to miss opportunities on these 3 amazing companies. Pinterest, ticker symbol PINS, formed a double top here on the 1-day, currently finding support at around $63. Now, this is still a little too high for my taste, so I want to see how it responds to the 200-day moving average at 59 bucks. And I will wait to see if we actually find support there. If it continues to break down, then I will likely buy Pinterest at $50 or below. If not, then I would likely reassess my position and implement some sort of dollar cost averaging process. So looking for Pinterest at the 200-day moving average at around 59 bucks. If it breaks down below that, I will likely wait until I see a price of $50 or lower, thereabouts. If it looks like it's finding support here, then I will likely start dollar cost averaging. Netflix is a low risk long-term opportunity here, and I like it around the $500 mark. We actually bought calls on Netflix. I did this live in my live stream this morning, and for those of you that want access to the trade alerts on my live streams, link is in the description below to our private trading group where I go live a few times a week, and I will on occasion make live trades. Usually they're day trades or more riskier trades, but we bought calls on Netflix on this morning's live stream. Those are currently down, but I'm expecting Netflix to bounce up in this channel. Either way, options aside, I think anytime Netflix is retesting that 480 to 500 range, it's a buy for the long term. And Twitter here, I think, is a buy bouncing off of the 200-day moving average. I believe that this was an overreaction post earnings. There was a lot of profit taking. You could see the on balance volume declining, meaning that a lot of people were selling their shares. However, we bought calls at the bottom of this candle right here, and we took 40% profits on these minutes after. You could see here the alert that I sent out. It was at 8:57 a.m. Pacific time this morning. I said buying the $60 call on Twitter expiring June 18th, and we were up 40%, at which point we closed our position. This was at 9:21, so what, barely half an hour later. But again, put options aside, I do like the stock here at around $55 for the very long term. Twitter was trading at 80 bucks just a few months ago. They have not changed their guidance after earnings. They still plan to double the revenue by 2023. Okay, the next set of stocks are vehicle stocks that are going to be benefiting from two major catalysts. One is the reopening during the summer, obviously after COVID. The reopening play is really hot right now. And the second is it's part of the EV plays. Now, it might not seem like it off the surface. You might just be thinking of NIO or Tesla, etc. But Toyota, Ford, Volkswagen, and GM are all major EV players, whether we like it or not. So Toyota right here sitting at the 100-day moving average. I really like a play here. I would set a stop limit at around the 147 price level, currently trading at 152. This is still a mid to long-term play. Now, if you are more in the shorter term camp, you could look to take profits at around $160 and above, but I would set that stop limit here just in case we draw down further and we get an opportunity to buy Toyota at the 200-day moving average or below. Ford, same thing, great opportunity here at the 100-day moving average. I actually bought the $12 calls on Ford as well, but I would buy Ford here, set a stop limit at around $10.60 just in case. And Volkswagen sitting here at the $50 moving average, I would set a stop limit at around $29.40. All three of these companies are great long-term companies, fairly low risk, very profitable car companies that have been around. They are also legacy brands that have been around for a very long time. And we obviously can't forget about GM, but GM is a little bit too hot for me here. I will wait on this. I see the double top forming on the 1 day. I did own GM before. I ended up selling it for profits, but on this one, I'm going to be waiting a bit to see what their earnings will yield. They do have earnings coming up on Wednesday of this week at the time of this recording. All right, the next set of stocks are in the clean energy sector. Enphase is the first one we'll talk about. The ticker symbol E, N like Nancy, PH, ENPH, Enphase Energy Inc. You can see their annual revenue killing it, going from around $300 million in 2016 all the way to $1.7 billion now. That is about 6x, a little bit less. So I'm not going to go into every single one of Enphase's operations, but they sell home energy solutions in the solar industry. They also provide energy monitoring and control services. And not only do they deal with home-based services, they also sell solar solutions to distributors. They recently crushed earnings by over 20% on their EPS estimates, and they're currently sitting at the 200-day moving average. Now, this stock was trading at around $230 just a couple of months ago, currently trading at 136 bucks. I think this is a low risk entry for a long-term stock. I would, however, set my stop limit at around $117 if you do enter here, but I am planning on keeping this for the long term. So me personally, I am going to be buying Enphase here, and I will likely just dollar cost average if it drops down to, say, the 300-day moving average, which is at around $103. So for me personally, I'm not setting a stop limit. I just gave you a stop limit recommendation or suggestion in case you are wanting to yourself. All right, the next stock I've talked about previously is Sunrun. Run actually reports earnings this week. Now, here's why I like buying this before earnings. If you happen to watch this video before earnings, and they report their earnings on May 5th, which is a Wednesday, but I really like Sunrun because of not only because of their company's fundamentals, which I've talked about before, and you can certainly look up on your own, but because their short interest is actually fairly high. Their short interest currently stands at around 20%, so we could see a bit of a short squeeze effect if it actually beats earnings. And I've discussed this before, but there are certain benefits and tailwinds from the new climate policy of the new administration that I think haven't been priced in yet. The other company that's in a similar position with regards to short interest and how beat up their stock is SunPower, SPWR, currently sitting at around the 200-day moving average, also reporting earnings Wednesday of this week at the time of this recording. These are both somewhat long-term holds for me, but if I do enter SunPower, I will be setting a stop limit at around $21. On Sunrun, I will be setting a stop limit at just below the 300-day moving average at around $42. And by the way, if you're confused as to how to set a stop limit, I did a whole video on this. How to set a stop limit, what is a stop limit, how to do it in Robinhood as well as Thinkorswim. I'll link that video here if I noticed that I've been talking about stop limits without realizing that I may be talking to a lot of folks who are fairly new and might not even know what that is. So if you want a full explanation on what is a stop limit and exactly how to set it, watch this video here. Anyway, guys, that is it for this video. Obviously, there are tons of reopening stocks still left, like Disney, Nike, Boeing. I've talked about these before. I still think that there are some great opportunities here to leverage for the reopening. Jets as well, which is the airline ETF. Some of the cannabis stocks, which Planet 13 looks like it's about to pop coming out of the symmetrical triangle here. Tilray, which was beaten down. However, it did complete its merger with Afria. So I'm waiting to see what Tilray is doing in terms of support. Once it finds support, I would likely buy into Tilray as well, because I don't think that the benefits from the cannabis legislation are priced in yet. I think that there was some exuberance here, but then it kind of died down when the legislation talks in a few states also died down. So that's good for us who are looking to play the hype off of cannabis, which will undoubtedly resurge again. Anyway, that is it for this video. Leave it a big fat thumbs up if you got anything out of this video. Leave it in the comment section below. Let me know which one of these stocks you're trading or ones that aren't on my list. I love to hear from you guys, and I would try to respond to each and every comment. If you are still confused about options and you really want to take advantage of some of these plays that we've been doing, some of these crazy plays that we've been doing, I did a whole course on options from A to Z, starting from what is an option, ending with some of these complex option strategies that I talk about. So if you've been confused about vertical spreads, iron condors, etc., you want to sign up for this options course. Link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.